Hello, trader friends. Today we're going to go deep into the 112 trade, one of the most famous trades on the internet, one of the most promoted trade by gurus or so-called gurus. And for you 112 trade fans, stay tuned because we're going to dissect it. We're going to see the good, the bad, and the ugly of the trade. And for those of you who have never heard about the 112 trade, the 111 trade, the 441 trade, stay tuned because we're going to go deep into the weeds of the trading enigma, the trading kaleidoscope. So let's get to it. First, let's start and go back in time a few years ago, where Uncle Tony, came up with the 441 trade. This trade, I came up with it because I wanted to find a trade that I could buy a long put vertical for free. I was losing my shirt while buying long puts. I was losing my shirt by buying long put verticals, and I was tired of it. I just was so tired of losing money. And you know why I was losing money? Because I was breaking one of Uncle Tony's rules, death before debit. So I was paying debits. You pay debits when you buy a put, you pay debits when you buy a long put vertical, and normally the market goes up. So what happens to your long puts and your long put verticals when the market goes up? You lose money, you lose dinero. And if you're like me, I hate losing money, and I'm sure you hate losing money too. So I was thinking and analyzing, what the hell can I do to buy a long put vertical for free? And that's how I came up with the 441 trade. And let's take a look at what this trade is. So the first thing that I wanted, like I mentioned, I wanted to buy a long put vertical for free. So on these type of strategies, it's best to go a little bit further than 45 days out. I like to go at least 55 to 65 days out. And luckily, the May expiration is 61 days out. And like all of Uncle Tony's trades, everything starts at the 25 delta on the put side. Why? Because every good chocolate chip cookie starts with wheat, sugar, and butter. So the 25 delta is a basic part of any solid trade. So as you know me, the first thing I like to do is buy at the 25 delta trade. And the second thing that I like round numbers. I like 25s, I like 50s, because my brain is not that experienced, it's not that smart, and I like round numbers. So I found the 49.75 strike, which is a round number. It's a 25 number, and it's a 26 delta, so it's pretty good. Then what I do is I sell 50 points out. And for you that are playing at home, I do 50 points on SPX. You can do 50 points on slash ES if you want a smaller trade. You can do 5 points on SPY. You can do smaller trades on XSP and even smaller on slash MES. Remember, the big daddy is SPX, the medium daddy is slash ES. Then we have SPY, which is a tenth of the size of SPX. And then you can do XSP if you want cash settled, or if you want even smaller, you can do slash MES. So now that we have given you the parameters for every size of account, and I'm going to sell the 49.25 put. So if this put is around $49, another one is $40, that means I'm paying $9 for this long put vertical. So remember, death before debit. So if we're paying $9 for something, we have to find something else that is $9 to sell against it. But I wanted to be more aggressive. I really, those 50 points on SPX, that $5,000 wasn't really a lot. It wasn't really exciting. It wasn't really doing anything for me. I wanted more. I wanted to make more money. I wanted to protect my portfolio even more if we went downhill. So what I started playing around, what if I bought two of them? What if I bought three of them? And what if I bought four of them? So amazingly, if I bought four of them, I could still sell only one extra put one measly extra put and have the trade on for free. So let's take a look at it. I'm going to buy 4 times the 49.75 long put. I'm going to sell 4 times the 49.25 put. And I'm going to eliminate this little sucker here right now. And let's construct it together. Let's construct it together. 49.75, 49.25. We're gonna do it. You see, it's almost worth $9. Let's go 1, 2, 3, 4 times, and then since 9 times 4 is 36, I have to look for something that is worth, you know, that amount of money. And here we are, the 48.90. But the 48.90, it's I only want to sell one. And boom, magic. Take a look at this. 30 cents credit. 30 cents credit, and I get a humongous, a, a four-way, a four long put verticals for free. Now let's take a look at the Analyze tab. Let's take a look at what the hell am I doing here. So if we analyze this trade, we're going to go to the Analyze tab and see what is going on here. Sorry. Now let's take a look at what the hell did you do, Uncle Tony? What the hell are you doing? So here we are. We can see that we bought 4 of the 49.75 long puts. And guess what? If the tsunami comes down and it hits our 49.75, boom, we go up. We go up humongous. We go up beautifully. We go up really, really high. And then we sold 4 of the 49.25. But remember, those verticals are worth $9 each. So 9 times 4 is 36. And then we sold one miserable, only one naked 48.90 put to finance all this scrap. What does this mean? It means if the market comes down crashing, we're going to win on those four long call verticals. And we just sold one miserable, one naked 48.90 put. And the buying power effect for this trade is the same as if we would sell one naked put. But take a look at this. This is very interesting. It's green all the way from 49 to 48 to 47 and all the way down here. How can that be? Well, you see our risk. The risk is always at the short strike. The risk is at the 48.90 put. But how come we don't lose money here? We lose money all the way down here. Why? Because we're going to collect this profits of these four long long put verticals. And if we have four long call verticals, it's we're gonna profit, and if we go down, we're gonna suck up all those winnings. We're gonna suck up all that money, all those long call verticals, and of course we have the naked put, so we're gonna be a little bit in the house of pain. So let's analyze and see what the hell, because I'm a graphical person. I want to show you a little more graphical. What did Uncle Tony do? So here we are. This is what I wanted to show you. So in this 441 trade, we are long four long puts. We are short four short puts, which is a long put vertical, and we sold one measly one individual short put. Now that the maximum profit for these four verticals, which are 50 points wide, is 200 points. Now our break even for our short put is, it's the strike of our short put, but plus 200 extra points. Why 200 extra points? Take a look at the chart again, because we are going to pocket those 200 points and they're going to put them in our pocket. So if our short strike is 48.90, like I'm showing it here, the max profit of 20,000 is going to move our break even from 48.90 200 points down to 46.90. So your break even is actually 427 points away. And even if we crash down, even if we go down a lot, nobody's going to take away that $20,000 profit. And what the hell do you do with that single short put? Well, Uncle Tony has a video that says what to do with rolling rolling down and out a short put. So what you would have to do is roll the short put down and out and wait until the stock market goes up, which it always goes up. And then once it's up again, uh, you see, you wait till the market goes up and then you roll it, and then you don't lose money on the put. You keep the $20,000 in your pocket, and boom, you are minting money. That is why I came up with the 441 trade. And that is why I love the 441 trade, because it puts a big profit in your pocket. It's like when you go to Vegas and you win four hands of blackjack in a row. You take those winnings, you put them in your pocket, and that money stays there. Nobody's going to take that money away. And with our losing trade, our short put, we just roll it and wait until the stock market goes up. And what is the risk of this trade? The risk of this trade comes if you do not have enough money to hold that naked put. And that's where the 112 trade starts coming in. That is where things are going to get more interesting if you are 112 traders. Why? Because the 112 has two puts at the end, and all my other trades only have one put at the trade. So what do you think? It's better to be short one unit or be short 2 units? So don't worry. Let's go and analyze each of the transitions, each of the different trades that will take us from the 441 to the 112. And since we stayed and we analyze deeply the 441 trade, I'm going to go a little faster. Of course, you can stop the video at any point and review what the hell am I doing. So let's see. Let's go and take a look at our gorgeous, tasty trade platform. And let's go back to the table. Let's go back to the May expiration where we have set up our trade. And here we go. If you see on the bottom left, if you see on the beautiful bottom left, what we have created is this 441 trade. We're long 4 of the 49.75, we're short 4 of the 49.25, and we're only short one of the May 17 48.90 puts. So what happens if you want to be more conservative? Instead of the 441, I'm going to start changing it to the 331, to the 221, to the 111, and see what happens. So the first thing we're going to do is take a look at here, bottom left. I now turned it into a 331. So instead of a $9 credit, what we can do, trader friends, is move this put down. And let's start moving it down. Do. Let's start moving it down. Let's start moving it down. Okay, we started moving our short put all the way down to the 48.10 strike. Wow, Tony, that's pretty cool. And let's take a look at the P&L chart. The P&L chart changed a little bit. Remember this trap or tent or whatever people call it? It was higher. Now it's a little bit lower. It's a little bit lower. And what other thing you can notice? You notice that the short put is not up here at the 48.90. It moved down to the 48.10. And something else you might notice, our break-even point is even lower. It's even lower. Of course, there's no free lunch. If we lose one of the 4 long put verticals, we lose $5,000 of profit. So now that we have 3 long put verticals, our maximum profit, of course, our maximum profit is no longer $20,000. Our maximum profit now is only 3 times 5. 5 times 3 is 15. So now our profit is only 15 beautiful $1,000. Yeah, which is not bad, which is absolutely not bad. And let's take a look at this. So the 331 trade, we're long 3 long puts, short 3 short puts. Then we sell extra naked put to complete the trade, death before debit. We get a small credit. Our maximum profit is 150 points, and we have a maximum profit of $15,000. But our naked put is at the 48.10, and our break even is all the way down to the 46.60 trade. Wow, that looks really amazing. Now let's take a look at the 221 trade. Tony, I know. What the hell are you doing? You're going for the 441, the 331, the 221, and now yes, we're going to take a look at the 221, but we're going to do it really really fast. So take a look at here to the bottom left of the screen. We're long two of the 49.75s, we're short two of the 49.25s, and we're only short one. And once again, we have a huge credit. So once again, we can start moving it, moving it, and boom, boom, boom. We're still getting a credit. We're still getting a credit. We're still moving it. Oh my God, Tony, I like this. We're moving it away from danger, away from at the money. I moved it too much. I moved it too much. I got too carried away. I got too carried away. So here we are. I moved it down here, and let's take a look at the chart. Now you notice something else. For you graphical people, the height of the tent, the height of the trap is a little bit lower. It only has a $10,000 maximum profit. Why? Because 2 times 5,000 is a $10,000 profit. And now our short put is way down here, way down here. And our break even is even more conservative. Wow, maybe it all depends. If you think the stock market's going to go down hard right away, you do the 441. If you're not sure and you're scared, you do the 331. Or if you're a little more scared, you do the 221. If depending on how much, how big your cojones are. I hope you can say cojones on YouTube. Who knows? But if the computer doesn't like it, then they might take away my video because I said the word cojones. Now let's take a look at the numbers. Let's take at the look at the numbers of the 221 trade. So the 221 trade, it's 100, it's 2 times 50, so it's 100 points wide. Our short strike is the 46.90, and our maximum profit is $10,000. And because we have 100 points of cushion, our break even is all the way down to the 45.90 put. Wow, I'm starting to like this. I'm starting to enjoy this. I'm really really liking where we're going with this. And let's keep going. Let's keep going, and now things are going to get interesting. Stay tuned because we haven't even touched the 112 trade. I'm just telling you where the hell this trade came from. Even though all these people say they came up with it. No, no, no. Uncle Tony did. But I don't want the credit. The internet is a wonderful space. Anybody can take something and make it their own. And that's what they did. And I applaud them. I really applaud them. So let's keep going really, really fast. And let's see what's going on with the trades. And now we're going to convert the 221 into a 111. Once we convert it into a 111 trade, you know the drill. We're going to be able to move this. Oh my God, we're going to be able to move this trade a lot. Why? Because we only have one beautiful, one ridiculous, one insignificant trade. Oh my God, I love round numbers. Bingo. We went down all the way to the 440 trade. Now let's take a look at our trade graphically. Oh my God, I even have to make it smaller. The, the size of this tent is humongous. Look at that. Look at that. Oh my God. Wow. So what's going on here? Now the size of the tent is humongous. It's giving us a big place where we can make money. And for all you 112 traders, this is what you like. This is what you enjoy. This is why you play the game. In order for the S&P to land here, it's like landing in the roulette. If you land inside my little trap, if you land inside my little tent, you will make money. But since we only have one-on-one here, our maximum profit, you guys already know, it's only $5,000. $5,000. Why? Because 50 points on SPX is $5,000. But look at this. Look at the break even. Oh my God, the break even is all the way down here. It's all the way downtown. It moved a lot, and It's incredible how much we were able to move our our break even, which for more conservative people, they're gonna love this. So if our short strike is 440, and we have a maximum profit of $5,000, our break even moves 50 points down to 4350. Wow. Now, that's incredible. This is one of my favorite trades. This is a trade that I do all the time. This is a trade I really love. Why? Because the break even is, yes, 767 points away, which is a humongous. It's crazy how far away this is. And I'm really not afraid of selling 4350. But if you look at an S&P 500 chart, the 4350, we were there 4 months ago. I mean, just 4 months ago. That's how crazy, that's how big this rally has been lately. So it's incredible. If you start playing around with the 441 to the 331 to the 221 to the 111, we were able to move our trap. Of course, less profit, but bigger margin of error. Remember, each one of you is different. Each one of you has a different risk profile. Each one of you has different size cojones. So you do whatever you want. If you want your short put closer to the money, you can have more long put verticals. If you want, you have short put further out of the money, you can have less amount of long put verticals and have the short put really, really further out. Now, the moment you were always been waiting for, the moment you 112 traders, the moment the clickbait uh, video thumbnail that I created is coming now. Now let's take a look at the 112 trade. The 112 trade that everybody likes, that everybody loves, that everybody is in love with on the internet, and see why I think uh, it may not be the best alternative for all you guys. And why do you say that, Uncle Tony? Because I'm always worried about units. I'm always worried about how many, when I mean units, it's how many naked units I have at the end. In the 1-1 trade, in the 1-1-1 trade, I only have one naked unit. Now, if I go down here, all the way down, I know, we're already far down, Tony. We're already far deep in the woods. And I change this to 2. Guess what happens? Take a look at the bottom left of the chart, and I moved it a lot. I moved it tremendously. Then now we have a huge credit, and we can move our short put uh, a long way. Because of the magic of television, I already know where I want to move it because I'm lazy moving it. I'm going to go all the way down to the 4,000. Yes. Yes, trader friends. All the way to the 4,000. I moved it 400 extra points. 400 extra points from the 111. Yes, that's absolutely craziness. That's absolutely ridiculous. So we moved it all the way down to the 4,000 strike, and it's really incredible. It's really incredible we were able to move it so far. We moved it really, really far away. Let's take a look at it on the chart. Oh my god, the trap is so big I can't even look at it. I have to make it. Oh my god, take a look at this. So we have our long put vertical here for 50 wide, 5,000. It's still $5,000 maximum profit, and our risk is moved down all the way to the 4,000 strike. Our first one was all the way up here. Remember, the short put was almost on top of our of the short put of the long put vertical. Now it's all the way down here. It's down. It's so far down I cannot even see it. But there's something that people are not telling you. You have 2 units, 2 instead of 1. Remember, the risk of this trade is here. Pay attention, trader friends. This trade allows you to have the risk put away really, really far away. You won't. It says 4,000 is so far away. I can't even. My screen is not big enough. I need a 40-inch screen. I need a 100-inch screen to find the 4,000 strike. Yeah, but what happens if we crash down? I know crashes only happen maybe every 3, 5, 7, 10 years. But what if you're loaded up to the wazoo with 112s? What happens if you crash down and you have a lot of units down here? You know what's going to happen? You're going to be in a little bit of pain or a lot of pain. And if we're going to crash down anyways, the profit that you're going to make, you're still going to make it. You're still going to make the $5,000 profit. You're still going to have that $5,000 put in your pocket. But what you won't not have is you're going to have the margin clerks. You're going to have the people at Tasty or TD or Schwab or Interactive Brokers call you and say, hey, amigo, we need more dinero. We need more margin. We need more money from you. We need more collateral. And there's another problem. When the market starts going down, guess what? Your net lick also goes down. What does that mean? That means you're losing money normally. You're losing money. So you have a double whammy. You have you're going to have more margin being required from you from your broker because you have two units instead of one, and then the net value of your portfolio also is going to go down. So you're going to get doubled whammied. And the third whammy is, if you know how brokerages count risk, they count risk at the second standard deviation. So if the market crashes, VIX goes up. And if VIX goes up, the risk goes up. The value at risk of your portfolio goes up. The the brokers are not going to be happy that you have a lot of short naked units down there, and they're going to demand something very easy: more money. And if you have more money to throw at your account, that's fine. Do as many 112 trades as you have money sitting around and waiting for a market crash to send it to the broker. I know all you advanced traders say, Tony, that's why I do the black swan hedge. Yeah, that's great. But what type of black swan hedge do you have on? Do you have a solid black swan hedge on? Do you have a weak black swan hedge on? Do you have enough units of the black swan hedge on? So you see, markets move, risk moves. So even though you might think you're protected with a black swan hedge, we don't know how many days you have left on your black swan hedge. We don't know how many units you don't have in your black swan hedge. And of course, let me tell you something, because I've traded through crashes. The computer doesn't like you taking out black swan hedge trades if you have a lot of naked units. So in order for you to profit from the black swan hedge trade, you're going to have a lot of them on. Either you bought them or you are an unbelievable black swan hedge trader, which you could be, and I could be wrong. But most people here, I would say, the large majority are not experts on the black swan hedge. They're not experts on how to put on black swan hedges, how to take off black swan hedges, and how many black swan hedges you need to have on. And that's the reason why we have to be careful about the naked units that we have. The naked units will explode. The naked units will put you in the house of pain. These two units, these two units here at the end are the reason why the 112 trade is not my favorite. Of course, in normal market conditions, the 112 trade is unbelievable. Everybody's minting money. Everybody is oh my god, I want to make a 25% return. So in order to achieve that 20% return, you have to do a shitload, a humongous amount of 112 trades. And I don't know if you're prepared for that. I don't know if you know the type of risk you're taking. So let's do a little recap to show you the differences, so you can tell Uncle Tony if he's a total idiot or if I'm onto something. So here's a little recap. The 441 trade has four long put verticals, 200-point profit, and we only have one short put. The 331, 150-point profit, $15,000 profit. The 221, 100 points profit. If we go down, one naked put. The 111 trade, 50-point profit, only one naked put. And the 112 trade, guess what? It has also 50-point profit, but it has two naked puts down. And here's a beautiful comparison. So on the first trade, the 441 trade, our break even was 427 points away. On the 331 trade, our profit goes down from $20 to $15,000, and we were able to go a little further out to 457 points away. On the 221 trade, uh, our profit goes down to $10,000, and we are now at our break even of 527 points. And if we go down and we do a 111 trade, our risk is now 767, like the Boeing. Oh no, that's the Boeing 757, I think, or 767. I don't remember the name of the plane. When I was growing up, that was the jumbo jet, the jet that had two stories. I'd love to go on the top story of the second story of the plane, but that's another story, boys and girls. So the break even is very, very far away, and we still have only one short put of trade. And the 112 trade, I know it's 1,142 points away. It's so far away, you need a humongous long monitor to see it. You need one of those curved monitors. But the problem is you have two short puts. So if you think the market won't crash, if you think the market is going to be okay, don't listen to Uncle Tony. Do you see? I gave you the recipe. I gave you the recipe for cookies. You can have the basic recipe for cookies is flour, butter, sugar, water, milk, cream, or whatever you like. Then you can add chocolate chip cookies. You can add peanut butter. You can add Nutella. You can add blueberries. You can add cranberries. You can add whatever you want. You can even add bacon. But just so you know that if you add extra sweetness, extra juice by adding one extra put, your cookie's gonna be very sweet, very delicious. But if you eat a lot of those extra sweet, extra delicious cookies and you get a belly ache, which is a market crash, then you might not be happy that you ate so many of those extra sweet cookies. So there you have it, 112 traders, 111 traders, and 441 traders. Trading is an art, it's not a science. You have to tweak it. I just wanted to show you what the differences are from the 441, 331, 221, 111, and the 112. Of course, everybody has a different risk tolerance. Everybody has a different trading style. Everybody has a different comfort zone. And everybody has different capital. So tweak your trading to fit your risk profile, tweak your trading to your risk appetite and how much money you want to make. And I hope this video is valuable to all of you guys. Now, I'm not saying don't do the 112 trade. Don't eat the sweet cookie. You can eat it, but eat it in moderation. Don't make it the only thing you eat during the day. Now, if you want to grow your pile, follow Uncle Tony. If you want to make money like Uncle Tony, do the 441, 331, 221, 111, 112 trades. And remember, you got to risk it to get the biscuit, baby.